Well, joining me now with more and specifically what this means for the housing market is Nina Gidwaney, head of refinance and home equity for Chase Home Lending. Nina, thank you so much for joining today. Of course, a busy session for market participants in the wake of that Fed decision. Based on what we learned yesterday, what does that mean for the path forward for mortgage rates?
Well, thanks, Kristen. It's great to be here, and thanks for having me. And so, yes, yesterday's announcement of the quarter-point rate cut didn't surprise the market, but I think what is more surprising is what it means for the future and what's the rate outlook going to be next year. And I think, obviously the thing that we like to focus on with our customers is, what you can control, which is your own financial preparedness, getting ready for home ownership, understanding, what you can afford. And yes, there will be some volatility going forward here in the market, but control what you can is sort of our message.
And as we look to round out 2024, Nina, what are some of the trends that you're seeing within the housing space that may carry over into 2025?
Yes, I mean, one of the trends we're obviously seeing is this volatility, Kristen, and I think that has been a marker of 2024. I think we could expect some of that volatility to continue into 2025. But one of the bigger trends is around affordability for our customers, which we obviously care a lot about. And so, today, if you're a first-time home buyer or someone looking to buy, you're faced with elevated home prices, diminished housing inventory, and more competition for that inventory. And then you pair that with the cost of home ownership, not just higher rates, but expenses, taxes, insurance associated with that. Those things alone could take up to 35% of your take-home pay. And that is a very significant challenge for many customers and one that we care deeply about.
Interesting. And, well, of course, we know that the spring buying or selling season, however you want to cut it, will be here before we know it, usually an active time for the housing space. What is your expectation when it comes to home buying and refinancing?
Yeah, I mean, I think, Kristen, we're going to see home buying continue. At the end of the day, customers do need to move. They need to, take on new jobs or move across the country. And so that will continue. And I think there'll be home buying requirements across the board for customers. What we do hope to see, and I'm hopeful that we'll see some episodic rate improvements and some relief over the course of the coming year where customers may be able to take advantage of a refinance, and lower their mortgage payments. We saw that in September, a slight reprieve in mortgage rates. And we hope to see that going into 25 as well.
We've seen the consumer remain very strong, very active. Certainly the GDP number that we got, a revision for the third quarter this morning, Nina, before the market opened and the show began, indicated that with U.S. GDP growth of 3.1%, up from a prior read of 2.9%. What's behind this consumer optimism?
No, I think part of this is all signaling that, the economy in many ways, and the Fed said as much, is still strong, and consumer sentiment and consumers are still spending. And the other thing we're seeing is that there is a little bit more getting more accustomed to higher rates. And we've seen higher rates for longer here, which may be a sign that, again, customers are sort of grappling with the fact that they will, if they have to enter the housing market, do so at a higher mortgage rate. And that lock-in effect that you see with many customers, who are sitting on a low rate or an ultra low mortgage rate today, we may see that soften over time again as customers get more accustomed to this new environment, knowing that they can refinance into the future if that presents itself down the line.
For our viewers watching, Nina, what would you say is a way that they're able to keep home buying affordable in this market?
I think there's a couple of things that they can do, Kristen, to make home ownership more affordable. One is to look at assistance programs that are out there. Many lenders offer these programs. These are home buyer grants or down payment assistance programs. Chase offers a home buyer grant of up to $7,500 when you're purchasing a new home in over 15,000 areas across the country. And so you want to look at those sorts of programs that might offset the cost of home ownership. In addition, there's low down payment mortgage options. And, again, Chase has a Dream Maker product with a down payment as low as 3%. and flexible credit guidelines. Many lenders offer those as well. And then lastly, I'd say, Kristen, as a consumer, make sure you shop around. Make sure that you ask lenders to compete for your business, compare and contrast the options you're getting so that you can get the deal possible.
Nina, anything else our viewers should know as we look to round out 2024?
Kristen, I think, again, we have some optimism about where the market will go next year, despite, some of the pronouncements yesterday. The economy is strong, the market is strong, and at JP Morgan, we're here to help our customers achieve their home ownership goals. And that is our primary goal going into 2025.
Nina Gidwaney, thank you so much for joining, of course, after a busy week, including that Fed decision and GDP report this morning. Nina's the head of refinance and home equity for Chase Home Lending.